Welcome back to We Talk Money. We've got a lot to cover today, actually. First up, we're going to talk about Tesla's earnings. This is probably the most contested, hated, and loved stock in the market right now. Also going to take a look at the real estate market. There's some battles going on there. We've got new Bitcoin and Ethereum spot ETFs around the world getting launched. We've also got a much higher potential capital gains tax that I wanted to kind of bring up and see how we think if it passes, what that means for the markets. And we'll take a look at all the other markets. How's it going, guys?
Going well, going well. It's like you said, it's a busy time here.
Absolutely. Let's kick it off with you, Trav, talking about your article here in the Dow, the dailydow.co. Tesla earnings recap, a brighter future ahead, or is this thing going to die? And I love your tweet here. If you're not watching the video, if you're listening to the audio, Trav basically made a mind map of the Tesla ecosystem from humanoid robots to vehicles to battery cells to energy storage, solar, and more. Trav, what's going on here?
Well, we wrote about a month ago in the Daily Doe that there's dueling narratives between the bulls and the bears. This is one of the biggest battleground stocks in the market. It really has been for the last probably 5 or 10 years, but certainly now. If anything, the battle between the bulls and bears is only intensifying. And the reason for that is that, frankly, Tesla earnings stunk. They were bad. I mean, earnings were down more than 50% year over year. Revenues were down 8% year over year, 9% year over year. So this is a growth business, quote unquote, that's shrinking, at least currently. So Q1 results from Tesla were not great. Adjusted operating profit down over 30% and adjusted EPS down almost 50%. So that's the bad news, right? And that's why Tesla stock was down like 40% year to date going into the report, because investors knew after the deliveries report that this was going to be a pretty stinky quarter. However, the Tesla team and CEO Elon Musk were pulling out all the stops on Tesla's earnings call, and even in the shareholder deck that they released for Q1, basically calling out all of the future potential growth initiatives and calling out that, that it's all about the future with Tesla. It's all about things like humanoid robots and the autonomous taxi network. And in fact, they even dropped a new term called the cyber cab, which is maybe what they're calling their future robo-taxi now. So even though we've been promised things like robo-taxis for years and years by Elon Musk, they say it's right around the corner. Maybe it is. But the bulls are excited today. The stock has popped basically on all the excitement over these initiatives, these future initiatives. And so once again, the bulls have taken control, at least for today. But I'm still a little skeptical on how Tesla stock's going to perform for the next couple of months. I think this fade could actually pop, or this pop could actually fade further here over the next few weeks. We'll have to watch and see.
Yeah, if you're looking at the chart here on the video, yes, there was a gap up and a pop, but like Travis said, I mean, this is likely to fade. If you look at the bigger picture view, there's a massive head and shoulders pattern with the neckline at $100. And so I think $100 is the line of worry for Tesla. We talked about this last week that, if this line snaps, look out below and things could get really, really ugly here. And Tesla's been one of those stories, Trav, like you said, just loved and hated. But at some point, the hype kind of wears off and people look at the reality of an AKA growth stock, right? That's losing value. So I don't know. It's one that people love to love and love to hate. And personally, I drove by the Gigafactory in Austin a couple months ago, I guess. And I was like, man, look at all the Cybertrucks just sitting outside. Like, are they sold? What was the deal? I couldn't tell. And then this week, I think we got the news that Tesla's laying off 2,000 or 3,000 Gigafactory employees in Austin. So that's kind of interesting. How is that going to impact the Austin housing market and economy and Tesla in general? Do you think that's a good thing, a bad thing?
Yeah, I mean, ultimately, it's a weird thing for a company that's got all these growth initiatives to be laying off employees, right? I mean, it does raise some eyebrows there. I do think it's probably necessary in the short run, unfortunately. And obviously, we feel for the people that are laid off. We may even know some of them here in Austin. But, Tesla's got a lot going on. And honestly, I think they could benefit from some focus. Like a lot of the other big tech companies that maybe got themselves into too many areas and hired too many employees over the past few years, I think Tesla should probably drop some programs, frankly. I don't know why they're still talking about building a factory out to produce semi-trailer trucks. Like, I don't think that's a market Tesla really needs to be in. frankly. We could argue about that, obviously, but I think if they focused on things like their cybercab and their autonomous driving network, and they've got this new ride hailing app that they're talking about developing, those are things that are pretty core adjacent to the car business, which frankly, Tesla is still a car company. Elon Musk would like to say that he thinks of it like an AI and robotics company. But when 85 to 90% of your revenues come from producing cars and selling cars, I think you're still a car business. And so I do think over time, they'll be able to diversify into some of these other areas and get more software revenues. They've been successful in doing that already to some degree, but I think they could benefit from focus. So, they keep also flip-flopping on whether or not they're going to produce a lower cost Model 2 model. And they keep, there's rumors that they are dropping the program. Then Tesla all of a sudden says they're going to speed up development on that program. Then there's people saying, well, scrap the low cost model and just focus on a low cost autonomous taxi. I mean, that might not be a bad idea if they think they can get the regulatory approval to run an autonomous network, right? So I do think if they focus on a few core things that could really drive massive TAM, that would really benefit Tesla. And I don't think they need to be doing all of these other things like, building out a Dojo supercomputer or, building out the semi factory or more gigafactories, right? I think some focus would be beneficial here.
Can we just scrap the Cybertruck? Initially I was excited by it, but every time I see him on the road, I just cringe.
Well, yeah, we're starting to see them more and more here in Austin. And again, one of those things that really draws very differing opinions. And so even maybe the angle that you look at it may give you a different opinion. Maybe the front of it, like I think MKB said, the front of it looks iconic. The back of it looks like a dump truck. So I don't know,
man.
but we are seeing more of them roll out. I think Tesla is increasing production. And I think for this year, they're probably going to sell an increasing amount of them. To me, the real question is, how many of those are they going to sell in year 3, 4, 5? And that's TBD.
Good point.
I wonder how people are liking their Cybertrucks. I haven't heard much from people that own them. I don't know if you guys have, but
yeah, leave a
that's
comment
big
if you're watching this and you own a Cybertruck. Let us know. Do you like it? Love it? Hate it? Are you going to get rid of it? Are you going to keep it forever? Yep. Talking about throwing shots or firing shots and throwing shade. Is that the term? Nikki, I saw on Twitter, you were getting pretty aggressive, man. You've been throwing some shade at people. And I think you wrote about it in the dough.
Nick is doing important work out there.
I think both of you are getting kind of fed up with the bullshit.
Oh yeah.
Not all heroes wear capes. Okay.
Yeah. I mean, you're even quoting some of the bad financial takes here in the dough. I love it.
Okay.
I love it. What's going on out there?
Okay, let me just start by saying these are two of the most disliked accounts on Twitter. And I've interacted with the Fi couple, and I think that they seem like they're very nice people. I think that both of these accounts seem like they're nice people. I have nothing against them at all. But I'm sure they know, if they follow me, and many other people know, that if I see bad or just advice out there that's misleading or could get people in trouble, I'm going to address it. I'm going to make sure that people are not getting into trouble trying to follow it. And so these two accounts are kind of known for putting out engagement bait and content around finance that is less than factual, not backed by data and things like that. So I addressed it in the Daily Doe, just to make people kind of think about this stuff so they don't get caught up and believe everything that they see.
For anybody that's watching or listening to the audio, do you want to talk about what they tweeted and why it's bad advice and kind of, I guess, what in general you're against?
Here's my thing about like personal finance and just financial planning in general is everybody has such a different situation that I hate seeing these generalizations out there that are saying you should do this over this. This finance guy on Twitter basically was saying that he put out a chart crime and said that renting will 100% always be cheaper than buying a home. And this chart that quote unquote is proving that buying a home will never be cheaper than renting, which is just not true. It's not factually true. And with anything in personal finance, it depends, right? And that's what everybody needs to realize, is that the buying versus renting decision, it's a big fat it depends. It depends, and I kind of outlined some of the things it depends on. It depends on interest rates, home price appreciation, location of the home. Do you live rural or in the city? There's just so many things that go into that decision of if you should rent or buy. Chris, you and I rent downtown Austin. We're not buying downtown Austin. Like, it's not that I don't support renting. It's just, it depends on your situation, right? And so the second person was talking about how hack for getting rich in real estate. This one really grinded my gears because it's just so ridiculously vague and lacking context in any capacity. But basically, buy 1 to 2 properties every year for the next 7 to 10 years. Poof, you're rich. And to me, that is just so it's just too simplified. It's just too simplified.
I mean,
Talk
I
about
know tons of people that have actually lost their ass in real estate.
Yeah.
I
and
know
talk
a lot
about
of people.
opposite ends of the spectrum here, right? You've got one guy that's like, renting is always better than owning. And then the other person's like, owning is the way to wealth. You must own, buy more. It's like, wow.
Yep.
Yeah.
And
So that's
real
why
returns
Twitter,
on real estate, I don't know. You can make an argument that they're okay over a long period of time, but there's a lot of variables. There's a lot of ways to lose money in real estate.
yeah, and I literally just ran numbers for 2 different people, right? And both retirees. One person is absolutely having, a real return on their property. The other person, they just basically it was a forced savings, essentially. They didn't actually have a real return. They just kind of broke even on their property, and it was essentially a forced savings for them. So it can go so many different ways depending on what market you're buying in. People in Austin, I know, bought for the past few years. They're struggling with negative cash flow. They're trying to offload their properties right now. And of course, the supply in Austin is up a lot. So there's more competition, for trying to sell your home. So they're kind of stuck and having to have those carrying costs. I know that every market for real estate investing is different, but I don't know where this person is to where they're able to buy 1 to 2 properties and they're immediately cash flowing enough to where they're not worried about real returns. So those very simple engagement baity posts, Twitter hates them, and I don't love them, and I just like to address them.
Love it. Love it.
Well
Drag them.
said.
I don't know.
Drag them.
What do y'all think? I don't know. You tell me.
I think my feed has definitely been degraded down to stuff like that, just oversimplified. Like, this is what works, period. No nuance, no context. And I don't know, like you said, personal finance is personal. There's a lot of variables, and yeah, I don't know. Anyway, moving on. Let's talk about Bitcoin. Have you guys heard of this little asset class? It's been the best performing asset over the past dozen or so years.
I heard it's a Ponzi scheme.
It definitely, wait, who recently, there's this guy on YouTube. He's called the something prophet. He wears a mask and he's like, I'm going to piss off a lot of Bitcoin bros. Bitcoin is a Ponzi scheme. And it's like, no, do you know the definition of a Ponzi scheme? Bitcoin is actually the exact opposite of a Ponzi scheme. And there was actually a really nice chart that I think I lost, but it was comparing the dollar versus Bitcoin and how if you're going to make an argument for a Ponzi scheme, the dollar or fiat currencies in general are absolutely a definition, where Bitcoin is the anti-Ponzi. So that's my opinion. Trav, do you agree with that or not? I know you come from the evil, traditional finance world. What do you think?
I mean, I think I've been on record for long enough as being, pro Bitcoin that, you know my stance on this. I think certainly, like, Bitcoin, it's $1 trillion plus asset class now, and to ignore that and to just completely dismiss it as a Ponzi is just really silly to me. I can't understand the people that still have their heads so far in the sand. Like, you gotta look at that and say, I'm missing something. If you think it's a Ponzi, but it's got $1 trillion plus market cap and growing, and there's tens of thousands of people, if not millions of people across the world that own it, then you need to reassess what the value they're seeing and why they might see value in it. So yeah, I think, we've been interested in Bitcoin since 2011, 2012 timeframe. We've owned it since around that time. We've been heavily involved in the ecosystem, especially you, Chris. And I think even as a traditional finance person, you're starting to see a lot of us traditional finance people, by the way, coming around to it. Obviously the ETFs help, but there's RIAs now getting involved. We're starting to see those flows into the ETFs. We're starting to see those names show up. Very, very interesting data on that, by the way, recently. I think at this point, if you still have your head in the sand, you got to look yourself in the mirror and you got to go do your homework.
Yeah, absolutely. And I found the image here, said, which one is a Ponzi scheme? The US dollar, which has an unlimited supply, not backed by anything except, I guess, the military. You could make an argument for that, but it's centrally controlled. And if you look at the trillions of dollars of debt, the debt-based system, it's just been going parabolic, where Bitcoin has a fixed supply. It's backed by energy. It's backed by the largest computing network, if you will, in the world, and nobody can control it. And out of 21 million coins, over 19.5 million have already been released. So it's verifiably scarce and finite. And the other one is getting printed into oblivion. So I don't know. Like you said, anybody that doesn't see that by now, I don't think is ever going to get that. And they'll just have to buy much higher, I think.
This is an argument I've actually been having with people, back and forth. Like whenever I put out a YouTube where I talk about Bitcoin, I'll get like smart ass comments that are like, anybody that would recommend Bitcoin is I don't trust, unsubscribe, and you're still getting a lot of that these days. And even those accounts on Twitter, some of like the ones I've posted on that Daily Doe, arguing back and forth with them, like they just don't get it. And it's like at this point, I think ego is like getting in the way of these people seeing it for what it is.
Mhm.
And the adoption from the institutional investor side kind of really solidifying that this isn't going anywhere anytime soon. So it's just interesting how that mindset is still there. And there's going to be a lot of people that miss out probably because of their egos.
I was skeptical early. I think when it was first created, I think you could make the argument that, yeah, this thing was sort of created by a handful of individuals with some interesting technology behind it. But, it was sort of created, out of nothing. And it needed to find broad adoption to really become something. And if it didn't, it was just basically a made up digital currency, right? Like it didn't necessarily have a whole lot of inherent value at the beginning. And you could make the case that, it was magic internet money, so to speak, right? With some interesting tech behind it. But, after a decade or more of more widespread adoption and it playing a role as not only a store of value, but a way to protect against, certain situations in countries where there's hyperinflation. Obviously, there's 10 other use cases we can name off, right? And a growing number of use cases. But at this point, I don't think the same criticisms that you had in 2011, 2010 are valid, and you have to look at it with fresh eyes. And so I think that's the most important thing. If you've been a Bitcoin skeptic, look at it with fresh eyes is what I would say.
And if there's any doubt that we have global adoption today, check this out. The Hong Kong spot Bitcoin and Ethereum ETFs are officially approved to begin trading on April 30th. These are 30 basis points up to 1%. And there's going to be obviously a battle there. But I mean, how cool is this, guys? Like not just the US markets, but Asian markets are also getting traditional access to this asset class. Again, finite supply, global demand. It doesn't go up in a straight line, but did you take basic economics?
Yeah, no asset class is perfect, right? Whether it's stocks, real estate, Bitcoin, anything else, bonds, there are downsides. There are times when price gets too overbought. We're not going to say anything's perfect and it's going to grow by 100% CAGR forever. But yeah,
right.
But look at your menu of options and think about which ones are providing you protection against certain things happening in the world.
Talking about protection against certain things happening in the world, you know what we need protection from, guys? Politicians and tax increases. That's right. Damn it.
I guess
Biden calls for a 44.6% capital gains tax rate.
Top tax
highest
rate.
since the capital gains inception in 1922. Here's a historical chart of capital gains rates over the past 100 years. You can see it's been on the low side, 10 to 15%. During the Carter administration, it was briefly at 40%. Biden is looking to take it from around 25% to up over 40 to 45%. What do you guys make of this? I mean, is this rational? Is it fair? Is it going to increase investment? Is it going to decrease it? What do you guys make of this?
He's already tried all this. He's tried the net investment tax, net investment income tax on active income. He, a lot of his tax policies that he wanted to implement, raising the highest tax bracket to 39.6%. They went through all of this and it just didn't end up panning out. And I don't know. So a top tax bracket of 44%, there would still be, lower. It's a progressive system. So there would be lower brackets for people that make less money still. But yeah, I mean, the wealthy, he's really going after the wealthy here. That's his whole, basis behind it. And the wealthy are probably, I don't see how they're going to get this through. Personally, I don't think Nancy Pelosi is going to call somebody up and be like, hey guys, hey, Congress friends, can we not do this? Was my trades?
I actually didn't look at the details. Nick, was this just applying to the short-term capital gains tax rate, which is based on income tax?
They're basically trying to tax over $1 million in capital gains as ordinary income.
Okay.
Instead of favorable rates, but also
so that could include long-term capital gains, right? If you booked a bunch of long-term capital gains, which should be at like 20 or 22% normally, if that was over $1 million in a given year, then that could potentially be taxed as high as 44 or 40, 45 essentially.
Yes. Yeah.
Oh, wow. Okay. That would be a pretty big step change in long-term capital gains.
Yeah, it would hurt. It would hurt a lot. And that's why it's a big change. And so I don't know what the odds are of something like that actually being passed. But the Tax Cut and Jobs Act actually sunsets in 2026. So one way or another, we're going to probably see some changes to the tax system, unless they extend all of those tax cuts that came through during the Trump administration. Which we have enjoyed very favorable tax brackets and very favorable, capital gains rates over the past, 4 years or whenever they implemented this. This is going to be an adjustment either way because they're probably going to have to make some changes. But yeah, they're definitely putting out some stuff that won't fly very easily, probably with a lot of people.
Yeah. So, I mean, I'll say this. I'll say this about, just theoretically, my opinion on higher capital gains taxes or really any higher federal taxes. The federal government in the US has a spending problem, not an income problem. I don't think we should be focused on the federal government trying to raise taxes and raise income as much as they should be focused on trying to reduce spending or at least get better returns on their spending. I mean, the level of spending, obviously, the level of U.S. deficit on an ongoing basis is at a pretty unsustainable high level right now. I think we'd all agree that. And I think if you look at the outcomes that are coming out of what the government is spending money on, I think most rational people would look at that and say, we shouldn't be giving the federal government more money. We should probably be giving them less and forcing them to get more efficient with their own spend that they already have. So that's my general take on it.
Travis for president. Yeah, man. Absolutely. I think you hit the nail on the head.
He's putting this out because we're in an election year, right? And
this is pandering.
Yeah, his position is tax the rich, which I do think there are certain things we need to be doing, especially with Social Security. That's a big one that we may have to increase taxes there to save it. But overall, I do think he's just kind of putting this out to remind his fan base of where he stands for votes.
You're here. Nick, I know you wanted to talk about affordability of real estate, which is like obviously a really big pain point right now. And this article came out this week that says nearly 40% of homeowners couldn't afford to buy their home if they were to buy it today. So I guess that means Gen Z is screwed.
I was thinking about this, thinking about people that I know in my own life who bought houses, 2015 through 2020. And there is no way that most of them could do it today, like with the way things look today. So I don't know. Something's going to have to give here with the housing market for affordability reasons. It's just not working for most Americans. And that sucks. But the
Yeah,
new homes,
rates have been ticking back up too. We're back getting close into the mid sevens again. So definitely not a
yeah,
good sign.
we're kind of starting to see some supply come back online, but there was a battle on Twitter about this. New home supply is up, but the existing home supply is still, kind of over. If you look past, historically, it's still generally lower. So we're still not there yet for considering the demand for housing, especially the demand for affordable housing. So I don't know. I just think that something's got to give with this housing market. Um, Certain areas are seeing decreases in prices, like Austin, but there's still a long way to go there. And I'm starting to be afraid that we might not see it. Like we might not see housing prices come down if rates are going to get cut. That could just kind of keep the floor on. Uh, but then again, if rates come down enough, that will really solve a lot of problems. But then there's the valuations, going up potentially. And that's what's concerning, is we're not really seeing the decline in the median housing prices that we probably need to see for affordability to really look a lot better for people.
Well, I wrote about this in the Doe, talking about, see if I can find it. How Canada's, housing market, they're in a much bigger affordability crisis than in the US. And everybody thinks, well, housing prices are high. So just like expensive stocks have to come down to earth, real estate does. But when you think about what real estate is, it also, at least land, is a finite asset. And the more people are competing for this finite asset. So I don't know. Yeah, it could be a thing where maybe we are in some new paradigm where real estate is just much, much more expensive. And maybe people are going to have to downsize or, start doing multi-generational housing or something like that.
I think more so what it's doing is it's increasing the wealth divide, like the wealth gap, because the boomers are rolling in it, right? And then that money's going to get passed down to the millennials. And then there's the haves and the have-nots. And I think that the current structure of how the housing market looks, it's just continuing to kind of push that forward in a way.
Yeah.
At least from my perspective.
Well said. All right, cool. So let's do some chart analysis. I think, guys, what we're going to do is try to do news on the front end of the show, charts on the back end, and also create some chapters for the YouTube video. So if you guys like that, let us know. Let's jump into it. So taking a look here at Bitcoin, if I can get my screen up. There we go. So we've been flirting with the all-time high now since early March. And you can see as of today, we're still hovering around this price magnet of about, 64, 65K. And we're now below the 50 period moving average. So we've been inside of this consolidation range for going on 60 days almost, coming up on, 6 or 7 weeks. And everybody's been asking, well, Chris, what's happening? Is Bitcoin, is this the end of the bull trend or what? And my argument has been like, no, we've just been consolidating because we had the biggest leg up ever in the history of Bitcoin with 7 green months in a row. And in 7 months, we went up on a percentage basis over almost 200%. So 190 something percent. And if you backtest what happens after 6 or 7 months of green, it's almost not a guarantee, but it's an extremely high probability that we were going to see a red April. And so all we've done so far is a very small pullback to retest where a lot of the trading action happened in the last market cycle. And so I've been looking for dips. I've been trading some altcoins. But right now, all eyes are kind of on the 60K zone. Are we going to get a bull flag for more consolidation? And is this going to hold up and eventually break back above the 50 period? Or are we going to do an extension to the downside and get closer to the 100 period moving average, or even the 200, which is way down around that key massive price zone of 50K. That's where the ETF was approved. And so it wouldn't be out of the realm of possibility that we actually get a washout and kind of liquidate out a lot of the weak hands before continuing higher. But we know that Bitcoin dominance has also been climbing over the past month. So even though Bitcoin has been flat and we've been in a Bitcoin bull market for over a year now, alts have also been in a bull market on a nominal basis. So in USD terms, altcoins have gone up, but compared to Bitcoin, they haven't. And I actually, in class yesterday, guys, I ran the numbers, and out of, call it almost 200 tickers that are accessible through the major US exchanges like Coinbase, Kraken, and Gemini, guess what percentage of alts are up over Bitcoin in the past 365 days? So basically, over the past year, what percentage of alts have outperformed Bitcoin? What do you think that number is?
I would guess 7 or 8%.
Nick?
I don't know the market well enough to say, but I'm going to go with 15%. I don't know.
Well, you both were close. Travis, you almost nailed it on the head. It's around 6%.
Ooh,
So
okay.
think about that. Almost 95% of alts have underperformed Bitcoin over the past year. Now, inside of that, you get some alts that make really big runs, and I've had some pretty good plays. This market cycle has been good, but not quite as nuts as 2021. But that's to be expected after all the, the flush out that happened with FTX and the SEC regulations and attacks. But if we look at stuff like Solana, when you look at both the USD chart and the alt BTC chart, which basically shows that over the past year, Solana, since I bought the breakout, is up more than 100% over Bitcoin. So this is why, my thesis has been ever since early last year that, hey, I think we're going to have an alt season, which we're having, but you can't do the whole shotgun approach. I mean, you can do whatever you want, but if you just buy a whole bunch of crap, if you go on YouTube and you look at these get rich quick crypto YouTubers that are like, here's the top 100 cryptos that are going to go 1,000x this month, you're going to underperform Bitcoin. So I think instead of the shotgun approach right now, it makes a lot more sense to be a sniper and just be very picky with which ones you're getting into and be quicker taking profits. So that's my read on the crypto markets. What about you guys on the stock side? What are we looking at here?
Earnings.
Yeah, being patient, waiting for deeper dips. I mean, this little baby dip was already getting bought up. Now, I think it could be a little bit of a fake out, because I think if you look at yields, they're still rising generally over the past couple of weeks. That's still going to, I think, provide a headwind. You still got this narrative shift out of rate cuts to now potentially some people are even starting to whisper that the Fed needs to hike. I think that would be a mistake for a number of reasons. But nonetheless, that could continue to put pressure on stocks, especially if we get through this earnings season and we continue to see, meager to slightly on balance negative reactions. I think we could be in for a tough early summer. There's that old phrase, sell in May and go away. And I think that could actually be true this year. I think we could see after the craziness of earnings season, I think we could see the market resume its correction, especially if yields are still hot and rising. So that's certainly what I'm watching as yields. And then, of course, like Nikki mentioned, we're diving into individual situations this week and next. Very, very heavy right now with Q1 earnings reporting season. Yeah.
How are earnings looking, guys?
They haven't been bad. It's just that the reactions have not been great. There's been a few winners like Tesla gapping up, even though they had, again, crappy earnings. But generally, some of the other companies that we've seen like JP Morgan, TSMC, We had, who was at the beginning of this week?
Visa.
Yeah, and there's been some, sell-offs after what were pretty good earnings reports, and I think part of that is that a lot of stocks had just rallied a lot over the past 6 or 12 months, and so they're pricing in high valuations and very, very strong results, and so if you deliver just good results, it's not enough. So I think that's a big part of the story right now, but we'll get a lot more data on that. I'm going to crunch the numbers after this week is over. I'll put that in the Daily Doe newsletter on, just exactly what the median and averages look like as far as post-earnings stock reactions. So stay tuned for that.
Awesome. Nick, I know you actually called this in the Doe a couple weeks ago, this trend line of doom, which you said if this snaps, we're likely to get a pullback to the moving average. That actually happened to the T here on the S&P 500, where once we snap below like 5,200, we had a run down, and not a huge sell-off, about 5%. But since then, this week, we've actually had a bounce. Do you think this is the low, or what do you make of this from a charting perspective?
Oh, it's tough because, well, I think the odds are in our favor that we see maybe we get to like an 8% correction, 10% if we're lucky. This could just be kind of a bounce after many days of selling off, which happens when we're, kind of trying to switch trends. Um, it's tough to say because we're still in the thick of big tech earnings. We don't really know what that looks like. But I do think that I'm disappointed. I'll be disappointed if this is the low. If that was it.
So you're looking to go
If
dumpster
that was the
diving.
correction that we were looking for, I will be disappointed. I actually was disappointed to see the bounce over the past few days. I kind of wanted to see that momentum, see that 10% correction, dip buy opportunities come aboard, and that's what I wanted to see. But of course, in the markets, you don't get what you want always. But I do think that there's still a chance that we could see this flip and continue that downtrend. We just have to see what comes out of the rest of the week because we still have a lot of people to hear from, a lot of big names to hear from. So that could change the sentiment pretty quickly. But
Okay, well said. Well, Nick, I know you got to run. Trevor, are you on mute? I think you are on mute.
Yes,
yeah, I think he was on mute.
Okay. What else are you guys looking forward to? Anything else people should be looking out for or thinking about over the next week?
There's this TikTok ban thing. I don't know how that's gonna create some waves in the markets potentially. Even with some U.S. like social media stocks, maybe I don't know, Snap or Meta could have a reaction off of that. I'm actually surprised though the Senate passed it, so this could actually become a law. This is only going to hurt U.S.-China relations even more. So that's interesting.
But it wouldn't happen overnight, right? It would be like they have 270 days or.
Yeah, that's right. But it's a little bit of a concerning precedent to me. Obviously, we know that there's been some concerns over, TikTok's algorithms, what they're showing or not showing, what they're promoting. There were concerns before about the data getting sent to China. They were supposed to obviously have that deal with Oracle so that the data gets stored in the U.S. And they say the data is getting stored in the U.S. So I don't know how much truth there is in the data stuff, but there are some concerns there, but there's also this broader issue of like, can the U.S. government, can laws just be passed to essentially force companies to have to sell assets or shut down? I think it's a little bit of a terrifying precedent. I mean, there's other steps I feel like could have been taken before, like dragging them into court over, data issues or algorithm issues before you just outright force a company to sell what is their crown jewel asset. So could this be extended to other networks, X, Meta, whoever? I mean, it's kind of a scary proposition. I don't know. I don't know if I'm on board with it, to be honest.
But on the flip side, it's good for our Meta shares.
Yeah.
I don't know. Trying to find the silver lining, right?
And we don't have to watch as many cringe dances, perhaps. I don't know, or day in the life TikToks. Who knows?
I can't wait for those to be so cringe later, like where those kids look back and they're like, "Oh my God, I can't believe we did this."
Yeah, I hope they see it that way.
Yeah, me too. One day, we'll see.
Yeah.
All right. Well, I know on the crypto side, we're just watching this consolidation area. Not much to say outside of that, other than we're kind of hunting season, looking for big dips and rips. So yeah, we'll get through the earnings season. We'll get through all the inflation battle stuff. And yeah, we'll see you guys next week. So thanks for watching. Go to wetalkmoney.com/community. If you want to check out the wealth building community, leave us a review on your favorite podcasting platform, and we will see you guys next week.
See
Take care.
ya.
Cheers.